Welcome back, everyone. We are now ready for the first company presentation at Agillic, and the company CEO Emma Gürsoy and CFO Claus Boysen. As mentioned in the beginning, we will take all the questions after the 20 minutes presentation. And with that, Emma, I'll give the word over to you.
Thank you very much, Kasper, and good morning to everyone. My name is Emre. I'm the CEO of Agillic, and I'm together with
Claus, the CFO of Agillic.
And what we would like to do is take you through together introduce you to our company, take you very quickly through our why our services product is highly relevant in today's world, how are we performing, and how do we see the future within the SaaS business altogether. We have some learnings from the current SaaS business environment, the market, international perspective, and how are we fitting into this perspective altogether. So if we start with a very quick introduction to our company, we are an omnichannel marketing automation platform. We work with data and we work with content, and together we automate and send personalized communication on behalf of clients to their databases, first-party data, and we do it in scale. This creates naturally impactful, meaningful, and profitable customer experiences. The whole idea is how to create the best customer experiences, bar none. Now, there are two elements here. Data, this has been the talk of the town for the last 2 years, starting with the importance of it, to the compliance part of it, and now in the regulations part of it. And on the other side, now very recently, really heated conversation all around the content, which is driven from the generative AI, and that's a very, very important part of the overall this way that we see the future. So we're partially operating in the middle of the talk of the town, or the worldwide topic of the most hottest news around the technology. Quick introduction to our company. We are a 10 million euro business on the ARR side, 100% SaaS business. We do not do product only, no professional services. Operating in Europe in 10 different markets. We have clients. We are 46 employees. And what we are most proud of it is our clients. They, for the last 5 years in a row, they've been awarded with the best omnichannel company, which means that our platform allows them to do really the best performances on when it comes to customer experiences. Now, when I talk about our clients and the environment that we're operating, it's spread through a large number of industries. Now, why is that? The reason is the data that I've talked earlier. The first-party data is a very important asset for companies as we go through the years, because that is becoming the most important asset to activate, to create a relationship with their customers. So to be able to do that and retain your clients, the industries such as retail, finance, technology, energy, these are the industries that are highly interested into how to get the most out of their data. Now, why is that? It's because there are certain use cases across the board highly relevant, such as higher conversion, higher retention of their clients, improved customer satisfaction, thereby having a customer lifetime that is increasing, using data, using content relevance to get to higher profit faster, and creating efficiency across the board of the number of employees that you have and how to get the most out of it. In the previous conversation, Martin was talking about that digital transformation, and the client and the companies need to empower their workforces to improve their efficiencies through technology. That's exactly what we're talking about. So this is the space that we are operating, and the way we see this is extremely universal, without any geographies, any burdens. The way that we're approaching to the market, our product is highly relevant in all geographies and all in these industries that are rich with first-party data as we speak.
If we're moving on to our Q1 2023 highlights from our financial performance, our total ARR, as Emma mentioned, was crossing the 10 million euros, where we increased our total ARR by 22% year-over-year. And revenue was increasing 70% year-over-year, hitting 16.3 million in Q1. EBITDA from Q1 was 0.0, which was a 1.7 million increase from last year's Q1.
Now, what we wanted to do is not just talk about ourselves, but just to give a bigger perspective and how we fit to the bigger perspective. Last week, there was a conference in London, SaaS TR is called. It's the largest SaaS business conference in the world. It happens in 3 places around the world, Singapore, London, and San Francisco. And in London last week, there were 4,000 people in the business attending this conference. Now, a couple of highlights I want to mention from this conference. Top left corner. What is happening is, overall, if you look at, they've done a research of 1 to 30 million AAR businesses. If you look at the scale of year-over-year growth rate, sales-driven growth rate, there is a decline in the 22-23. This has been the fact that has been going on. Even though the global SaaS market is still growing, the growth rate is declining. So we cannot expect the companies, SaaS companies, to grow as fast as they used to do. Again, going back to what Martin also mentioned, why retention of your clients is one of the hottest topics again. So on the left bottom corner, you will see 22 to 23, couple of changes. These are sentiments changing in the business. Longer sales cycles was the part of the 22 fact, and now it's lower win rates, as we talked at the top graph. We can see slower inbound, whereas the lower quota attainment. I think one of the presenters talked about that 82% of the sales teams are missing their quotas and targets in 2023, which means that it is really hard to get to the sales wins, though the pipelines are large and growing, but it is hard to convert. And why is that? There was actually a very interesting article 2 days ago in the industrial publication here in Denmark, 3 of the highest retailers, position CMOs, speaking about what has happened in the retail business, in their environment, and what is happening, and the way they see the future is there is a slow on the decision-making process. So generally the CMOs, for example, taking longer time, or the CEOs or the chief commercial officers are taking a bit longer time to make decisions. That doesn't change the fact that the need is still there. It just takes longer. Now, on the right side, there are actually quite interesting forecasts collected year over year, how they see, again, this is a large portion of a number of companies there looking at the statistics. Total growth rate is declining. Year over year growth in OPEX is declining. EBITDA, operating EBITDA margin, you can see still in the quite lower end of the minuses, and the year-on-year growth headcount increase is also declining. So that means overall efficiency is becoming a very important part of the running SaaS companies altogether. So now what we wanted to do is, how do we reflect in this? How are we promoting, working in this environment? Do you want to talk about that?
Yeah. So back in 2020, we started with a growth strategy saying that we want to achieve a double-digit ARR growth rate with a positive cash flow from operation and generating a positive EBITDA. So having focus on the growth as the other SaaS companies, but on the other hand, also having a narrow focus on our profitability and a ability to generate EBITDA. In our strategic announcement here in February, we added to this a new financial goal for 2024, that we also want to achieve a positive cash adjusted EBITDA, meaning that we are self-sufficient and not relying on equity investments in order to operate. We have, over the last 3 years, grown in our total ARR from 46.5 million Danish kroner in 2020 to 76.7 million in 2022. And if we look at the last 3 years EBITDA, we've grown from 0.3 million in EBITDA to 1.1 million in 2022. So a sustainable growth in EBITDA. What are we then doing over the last quarters, and what is our focus to continue this increase? Is that if we look at our EBITDA over the last 6 quarters, in Q1 2022, we made a minus of 1.7 million, and this year we have made a 0.0. And if we look at Q4, we have also increased that by 4.1 million compared to 21. So we are increasing the margin on our EBITDA in order to be EBITDA cash positive by 2024. We know that the sales cycle takes longer and the deal scrutiny up. We know that buyers are seeking proven and faster return of investment, meaning that our sales cycle take longer, but we have to tell the history of our existing clients and how we can actually prove together with them that they can increase their profitability, which retain our clients.
Exactly. Do you want to talk about how we actually, the sustainable growth, how we're moving from the operational excellences too? That's how we connected to that one. So
absolutely. So over the years, since 2020, if we measure Q1, we have, this is a graph of how our gross profit per employee has grown. So we have increased our gross profit per employee by 52% over 4 years, if we compare quarter over quarter. So continuously focusing on our operational expenditures while growing our ARR and growing our margins. So we are 100% focused on this sustainable capital efficient growth. And now we have also proven that we have a solid platform to drive our EBITDA margin from growth.
Now, just to add a couple of thoughts on that one. And we have been going through this exercise for quite a number of years, and we have become quite efficient on running our business. I mean, not all SaaS companies are equal, the size, the difference, the market, the product. But what we have found in our own matter is how we can actually get the maximum efficiency from our organization and define the go-to-market model that allows us to actually grow our business without necessarily increasing the cost base directly. So the reason that we were quite interested in sharing this perspective with you is because right now, with our performance, with our results year over year, and our way of modeling our way of growth going forward, future readiness, all our focus right now is about growing our business, retaining our clients, growing our new sales, which is basically ARR. So this allows us to actually have a better mindset and focus on our operational excellencies.
So what does this lead to when we look at our guidance that we have provided to the market? We have announced that we want to do an EBITDA of between 1 to 4 million DKK, which is an increase again from 2022, and that our total ARR is between 89 and 95. Our total ARR consists of ARR from subscription and ARR on transactions. And last year, especially our transaction grew a lot, and the gross profit margin on our transactions is lower than on our subscription. But as we can see from the EBITDA on Q1 2023, we have managed to increase our margins on transactions while keeping our cost steady, which is a part of the driver for increasing our EBITDA. So in Q1, we are at a level of 71.5 million and aiming to guide for 89 to 95 in total ARR.
Yes. So what I would like to conclude here is, if you have any questions, because we want to save some more time on that for today's conversation, because I think those who have been exposed to our story, our presentation, we're quite solid on our thinking, very obsessed our strategy and keeping an eye on that one with our focus. So let's talk about some of your questions, if you have any.
Yes, let's take them. And we have got a couple of, so I'm starting with an AI question. So does the management see generative AI as an opportunity to accelerate growth, as it potentially improves the possibilities for increased personalization in communication? Or do you see it as a threat, as content can be personalized without the same need for a marketing automation software platform as yours? So maybe some general perspectives on AI and how that maybe will affect your business.
Right. I mean, absolutely a highly relevant question, I would say. So if you go back in the beginning of the conversation that I was starting with the data and content, there are the two extremely important parameters of assets of our clients are working with when they're utilizing our platform. The best thing that could happen to us is data gets smarter. which is machine learning, and content gets more relevant. That's called generative AI. So anything that is happening within the classic machine learning or the generative AI is the best news that can happen for our business, for our clients, because they will get even higher performance from the utilization of our platform out there when they're connecting with their clients, customers. So the way we see this is it's a tremendous opportunity for us because it also has two legs on it. One, those who did not have a chance to jump on the wagon and start using marketing automation because of the absence of efficiencies, having the number of people, the capabilities to work with content, now that can be actually supported, not totally taken over, supported with generative AI, as well as those who are actually using marketing automation platforms like Agillic can actually make it even more relevant. Now, there was a research by MIT this year. They've done it naturally because the whole generative AI is the most important topic. They measured the real effect. Is it the productivity or is it the quality? And it's quite interestingly, 40% increase on productivity in a controlled environment versus 15% increase on quality. So which that means is for companies like us, when we're saying we are doing personalized communication to millions, the best thing that can happen to us is having generative AI supporting personalization with more relevant content so that it can be accelerated. So it's not a threat, it is the best thing that happened to us. One last topic. Last week we had, every quarter we gather our clients together. Last time, the last round, one of the presentations for all our clients was a case study from an AI company a technology platform that we are partnering with, how a client of ours worked with this AI technology, connected with Agillic, and what kind of results they've created. That's something that we share within our client base to actually inspire and path the way, because there's no one single way. It's a journey, and they gotta jump on it, and they're gonna learn and get better at it.
Interesting. Okay, let's move on to the next question here. We have also we have Viking Venture here in the beginning, so maybe this is relevant for that. How will the new major investors, Viking Venture, contribute to Agillic? So now I couldn't ask Martin before, but maybe you can take us through this.
Yeah, so I think we both can add into to this. I would say one major thing is that they have a nice track record. Let's start there. So it's a sort of a blue stamp on the company, what they are focusing on, what they want in the company in order to grow, and how they see the valuation to increase. And as you also talked about the stock listing price being the multiples being low at the current time, it's a good time to get into these investments for Viking as they see it. So we cannot comment on the stock price, but as they are investing in it, they see the opportunity. They also see that we have an operating machine that actually works and can create the profitability that is a part, of course, of also growing. So that's one stamp to it. They then also have a number of investments within our segment. So we are already connected to a lot of the other the companies that they have invested in, and trying to utilize on their knowledge and vice versa. So we are growing that way. So there could be a few examples on why an investment for Viking Ventures is a contribute to Agillic.
So it's both pricing strategy, product development, so on. They also give you some advices on this part, right?
I mean, absolutely. I mean, for curious souls like us, we are so interested to learn things we haven't tried, hypotheses that we should step into, try, learn. Because at the end of the day, we are all in a common cause. We are growing from Nordics to the world. So how do we do that? Has anyone tried anything that we haven't tried before? Any learnings? So just speeding up learnings, but also I think we are also experiencing that that push, that desire, that growth interest across the board from all KPIs. And we were just together with all management members of Viking Venture Investments, hundreds of people, sharing knowledge, understanding, interest, and growth for the future. So that's we like. I mean, anything that can help us to improve our ability, strategic perspective, operational perspective, and go-to-market perspective is highly interesting.
Cool. And we have 2 questions left and 5 minutes left, so let's hope we can take all of them. So starting with one of them, are you observing differences in buyer behavior across countries, and how is the German market performing?
I can give you on that one. I think there aren't that many differences from market to market in regards to buying behavior. It's equally more detailed. There are many more stakeholders involved to the process, where we used to speak to maybe 1 or 2 or 3. Now the number is increasing, and not only just horizontally, it's also vertically. So it is going higher and higher in the decision-making process, which is a typical, down economy time affair. The interesting thing is the way that we approach to the business with business impact. That is universal. So whether you're speaking to a German company or a Norwegian company, when we come to the picture and we put it together a business case, and we can show them that in the next 3 to 4 months, you will gain all that investment that you've done, and then you will start making more money after that. That's a universal approach. So it's taking much longer, but the buying behavior across the board is the same.
Okay. And then we have a specific question here about the customers. You had a slow start to the year with 0 net new customers in Q1, which speaks into the slower sales cycles in the market. Do you expect this trend to continue throughout the year, or do you expect a recurring later in the year? Perhaps you can share how the customers are behaving here in Q2 so far. And we have touched upon it, but maybe you can just elaborate more on it. What you see by the second half, or maybe what you see right now.
Absolutely. I think the interesting thing to mention is yes, correct. As we said and apparently this is not just, that's why I wanted to share the global SaaS perspective too, because we're all in the same approach, is because of the buying behavior is slowed down. The interest is still there, but the convincing elements are taking much longer to convince. Though from our perspective, I am very comfortable with the way that I see that one is the number of conversations we are having is quite solid and is growing, and the quality of the conversations we are having with our prospects is really, really strong. So I cannot exactly say more in detail about Q2 performance. We're going to go through it. We have a very busy 10 days ahead of us, but I can say that we are keeping on our guidance so far, and we are moving forward as we planned.
We can also add to it that there's still a sort of a seasonality within selling cycles. So Q4 is normally a little bit more busy rather than if you're looking into Q1 where people are starting new budgets and everything else. So that will happen. It might change a little bit due to the slower decision making, the focus on profitability for our potential customers, but for now it's not like something that we see is a huge difference.
Great. We have a tight schedule today, so I will conclude and say thank you very much for the presentation, Emma and Claus.